All right, Profit Strategies podcast. It's May. It's the end of April. We're going into May. Can you believe it, Chris?
I can't. Kentucky Derby's here, Tom. I mean, that tells you. Yeah.
And for those of you that are watching the podcast, no, I didn't rip off the hair off my face. I decided to clean myself up this week. My wife wanted to see a different side of me, so I showed her a different side. Anyway, welcome to the show, everybody. We got a good one here for you. We're going to talk about sell in May and go away. Is that still something that is valid out there? And that's number one. Number two, the Biden tax proposal. As been mentioned this week, we'll talk about the ramifications of that. Of course, it's not a done deal. There's a potentially one Democrat out there that could spoil this. But, let's talk about the worst case scenario and how it impacts you and I as traders and investors. And number three, based on number one, based on number two, what are Chris and I looking at going into the month of May? So let's talk about May, sell in May and go away. You know this. You've heard of this adage, Chris, right?
Well, yeah, absolutely. That's got to be one of the longest and clearly easiest to remember running sayings that go along with the market, right?
Exactly. So our good friends, the Hirsch Company, that would be Yale and Jeffrey out of Nyack, New York, they published something called a Stock Trader's Almanac. And in that, they mention sell in May and go away. This is a strategy that between May and November, the stock market is typically weaker out of the year. And from November to May, the stock market is typically stronger. Now, what we found in our studies is that between the November and May category, the stock market indeed is stronger. But May to November has been pretty much a toss-up. I really think it's about a 50-50. Sometimes we're up, sometimes we're down. What we have concluded in the long research that's been talked about in sell in May and go away, which basically means you go to cash and you sit on cash for 6 months. That's what the initial hypothesis of this theory is. What we have determined is that typically the VIX and the volatility index, VXX futures, tend to rise between May and November. There seems to be, if you ask the why guys say, well, we go into October. There's a lot of uncertainty between September and October. That makes the volatility index rise. Also, typically, and this might be different this year, but typically you get into those that Q2 area, and that tends to be soft. We're coming out of Q1 right now. We're actually over the hump. I call it the hump because we had names. We had the FANGs. The FANGs all released earnings this week. And so now what we'll start to see is as we go into the first week and second week of May, we'll see the number of companies reporting drop off. But it's been a good earnings season so far this year.
Sure has. Yeah, it has actually. I mean, the financials started it off strong. Financials kind of got a little weak as they do. I mean, that's another seasonality trend. But now you've got those NASDAQ 100 names coming in and giving a little bit of a catalyst. So the market's not getting much out of this, is it?
No, it's not. But I tell you what, I mean, you take a look at tech that got, that had some pullbacks. Yep. And you take a look at the earnings that Google threw up earlier this week. And I mean, they were good. I'm actually shocked with the amount of money that they brought in and their outlooks and their forward look that pop that happened the day after earnings. I'm actually shocked it didn't happen that much more.
Yeah, no, so I'm right there with you.
I'll set you up, Chris. So I did some iron condors on some of the FANGs. Did well on Tesla. It stuck the pretty much right in the range. I was a little nervous about Google because it popped up on the upper end of my range, but it fizzled out. So, that did well too. So for those of you that watched the YouTube channel, I did a video showing exactly how using options, you can get a good prediction of where these stocks are going to land after their earnings report. It's not perfect, but I'll tell you what, more often than not, this thing sticks it and works really well. But, now we're kind of beyond that. So we go into May and we talk about sell in May and go away. So, Chris, do you use this strategy, sell in May and go away? And if so, what do you do with it?
You know what? I'm selective with it, Tom. I think I follow that old cliche thing of there's a bear market somewhere or there's a bull market somewhere at any time. So to say that you want to just cast everything away is kind of throwing the baby out with the bathwater, in my opinion. When you look at, I mean, you just mentioned FANG stocks. Facebook in July, 80% of the time it trades higher by about 6% when you look at the seasonality of it. There are stocks that are going to move because let's face it, you and I aren't just pulling our money out. And neither are a lot of the big guys.
No. If anything, I'm in more in cash than I am in stocks and options right now. But I'm being very selective about where I put my money because I believe there are some areas that I just think are too expensive. It's like when I went to Lowe's last week and I saw sheets of plywood selling for upwards of $100. I'm like, I don't want to buy that sheet of plywood. We were, my brother-in-law was making a bench seat for the loft in our house. And so he goes, let's go out and get some really nice 3/4 plywood. And then we looked at the price and went, no, let's do the press board that they use on boats that we can get for 1/3 of the price. That's going to be just as well for the seat that you're looking for to put the foam and the embroiderment. And he's going to do all this design work for us. He said, you don't need this 3/4 inch plywood, not at this price.
It's ridiculous. I mean, you look at companies like LPX, Louisiana Pacific, they are printing money right now because you've got the lumber prices per board foot that have they've tripled. You know how this ends, and so do I. You're going to have the contractors that are going to slow down because margins are getting stretched. They're not able to make money on these new construction houses. People are going to start buying the existing homes, and lumber prices are going to tumble.
And you hit the nail on the head because if you look at now, and I'm just going to talk Florida because that's the market that I know. All right, my daughter's a real estate broker, and she says, if you want my opinion, don't buy a house today in Florida. Florida is acting like California and New York. Back in California, when for years you'd see a price for a house, and it was how much you were going to bid over it to determine whether or not you got it.
Yep.
We never saw that in Florida, but we're seeing it this year. We're seeing lots that have got sealed bids going on. I mean, it's ridiculous. And what's happening is you got Californians coming over here going, it only costs that much? It only costs that little? Oh, yeah, I'll pay more I'll overbid. And so the Californians and the New Yorkers who are used to spending more for a house and more for land are overbidding the properties. So we see that happening. The second thing that's going on is that when you sign a contract for a new house down here in Florida, you might have a clause in it that says, if the price of commodities go up, we are going to reset your closing price on your house. So they're not locking in the house prices like they used to because commodities are all over the place.
Yeah, I mean that's losing money as a builder. That's losing money right now because if you see commodity prices go up threefold in, a year and a half?
Yeah.
How long does it take to build from shovel to roof? How long does it take to build an average house nowadays, especially in Florida where you guys have so much inspection and such because of the hurricane?
Hey, listen, it's not that they can turn houses around here in 60 to 90 days. It's absolutely insane. It's because they don't have the basements. I mean, the water table is like right there at the zero line. So they poured a slab, and within 60 to 90 days, it's move-in ready. It's scary that they moved that fast. My house in New Zealand took years.
Yeah.
Took years. I mean, I bought the property in 2016. We just finished the outside. It's 5 years later, and the house is done. Now, part of that's because there were only 3 people that I know of any one time that were working on our house. It was like one guy was the manager of the other 2, and and then there's also things that we had to have imported in that we couldn't get on the island. So that was part of it too. But when you see a house get turned over in 90 days, you got to think, wow, how are these inspections going through so fast?
Yeah.
So what we're seeing is that existing is the way to go. If you want something, but you're going to pay up for it. Okay, so we moved out of sell and may and go away, but it does come back around that certain companies like Louisiana Pacific, in my mind, are overbought. And it's just a matter of time before things catch up and start to rotate over. And we see a lot of stocks like that. So I am picky about what I buy. But you know what? Let's finish up the sell and may and go away. And let me just mention this. So sell and may and go away was a pattern that is decades long, decades. But in the last 10 years, the month of May, the majority of the month of May has actually moved higher for the world's most popular stocks. So my idea with sell in May and go away is I like to sell in May on what I think are the overbought stocks, but I still want to be very selective as we go forward. All right, let's talk about Biden. Let's talk about Biden. Okay. So he threw some tax proposals out there. And Chris, would you like to start off the conversation with what he is proposing?
Well, let's just go right to the meat of it. If you make more than $1 million, and we're going to simplify things, obviously, Tom. You make more than $1 million, you're paying 43.4%, and that includes, the little kicker there for making over the $1 million. They're bringing up the capital gains tax right now because this is where people have been making money for some time. Capital gains have been that, if you will, you're in the upper half of the curve when you're worried about capital gains taxes, just to put it simply. So this movement that I look at it and started really a year and a half, 2 years ago, as we saw the Democratic candidates start to figure out who was going to be running for president. And you had a clear message that was, we're going to tax the rich. It started with Elizabeth Warren and Bernie Sanders and has moved upstream here. This is a situation that I think has been brought up by changes in our social makeup here, and very, call it bad timing perhaps, with the spending that we've encountered over the last 4 years, including a lot of money on a pandemic and a lot of infrastructure that needs to be rebuilt. So the bottom line is the country needs a lot of money. We're already at 0% interest rates. So the cheap money's been squeezed out there. Where's the next place you go? You go to the people, and the people that have it are the ones that are making $1 million or better. I think, and I'm sure you'll probably think you see this the same way here, that is also the same crowd that will spend a lot of money on accountants and tax lawyers to figure out exactly how they can minimize that and get away from it.
Yeah.
So you're going to have...
Well, now let's make sure we mention the word legally get around it.
Well, no, yeah, and I mean, yeah.
I mean, if there's some folks out there that are trying to dodge taxes, right. Hey, good luck with that because you're going to get caught. But I mean, if you're working with an accountant and you've got some tax strategies, I have a tax accountant. Yeah, I have tax strategies. We're talking about this year. It's with our tax team. I used to joke a lot over the last years with my wife. I says, you know what, we're getting off the mainland. We're moving to Hawaii. We're moving to Puerto Rico. Well, we won't move to Hawaii because even though it's so beautiful out there, their tax rate is just one of the top in the nation. But Puerto Rico has some very interesting tax incentives. And I always used to say that I'm going to jump ship and jump to the island. And now it's coming out of my mouth and it doesn't sound so much like a joke anymore. So, I might end up having to look at that one a little bit more, and see if there's something feasible there. But
you've already mentioned that you've got all the people from California coming to Florida and buying things. They're tired of taxes. You've got the people from New York that are coming to Florida and buying things. You've got them moving into Austin, Texas, because Texas is more lenient on tax. You've got West Virginia talking about dropping their state income tax. This is turning into a movement where we're going to see people that are going to be migratory based on taxes.
But you know what? You know what the Floridians are saying? Where do we go?
Right.
Where do we go? Where should we go? That's a lot of their concern is that a lot of Floridians are moving out of the city, starting to move away from the cities and get more into the center of the state. And even, Florida is home of the gated communities. It's home of a lot of folks have that Floridian lifestyle where everything is taken care of and all you got to do is go outside and golf every day and meet with your friends and go eat. And, it's almost like when you step in this state, there's a joke that you've retired the minute you move here. And for a lot of people, it seems like that. It feels like that. But that also comes with higher taxes and higher rates. And with all the push-ups that are happening, pushing real estate prices higher. Tax assessments are coming, and the way Florida makes its money is it makes it in tourism. It makes and it also makes it in property taxes. And so these property taxes are going to go up not on the millage rates, the percentage, but it's going to go up on absolute dollar rates. And I think it's going to start hitting some of these people harder than they want to get hit.
So going back to President Biden, and we're getting all kinds of information. And as I like to say, I think this is just kind of throwing spaghetti on the wall right now and seeing what's going to stick in terms of 43.4. Because the Republicans are going to have things to say about it, and even some Democrats are going to have some things to say about it. Where you and I both remember the days of when you would go back when taxes went up, capital gains taxes, and everybody just plowed money into Procter & Gamble and Colgate-Palmolive and these boring stocks. It didn't give you capital gains. It gave you dividend yields. What is the twist that you see coming here if we do? And I think it's inevitable. We will see an increase in capital gains.
Well, if the capital gains tax does come into effect, we will see I believe we're going to see a pullback in the market. And that's really more of a flight to safety than it is a dividend check. Dividend check's going to get taxed. It's going to get taxed at the new rate if you fall into any of those categories. But it's a safety thing. It's like taking your money and sticking it into the mattress of the stock market. That I think is the safest place to go. So it then becomes a matter of where what's safe and what's not. My list. I'll give you a list of what I'm looking at that might fall into that category. So I ran a scan on the S&P 100 stocks and ranked them by forward dividend yields.
Mm-hmm.
Altria is at the top of that list of optionable stocks, where you see forward dividend yields over 7.25%. All right. AT&T comes in number 2. AT&T, in my mind, is one of the safest places you can put your money because it really doesn't move around much. And it's paying almost a 6.75% dividend yield. And the forward yield looks like it's going to back off just a hair, but not much.
Yep.
Number 3 is Kinder Morgan. And Kinder Morgan, KMI, is coming in with, their ex-dividend yield right now is almost 7.5%. And they're expected next year to actually pull back to around the 6% area. But even that looks good. And then from there, you're starting to see the Exxons, the Chevrons, the chemical companies. But those, I think, are going to become very attractive. Maybe not so much for dividend. It could be for dividend, but for safety reasons.
Can I play devil's advocate?
Go ahead.
So energy is going to give you the dividend yield, both forward and current. If you see a capital gains tax that gets enacted, and as you mentioned, people are going to pull money from the market. How much of that trickles into an economic effect? And now we're getting into the books here, but how much trickles into an economic effect now?
You know what?
That slows oil?
Yeah, you got to. What is it? What's the stimulus package that is being proposed right now? 1.6.
Yep, you're 1.6 to 2 trillion, and then the Republicans are at 900.
Let's call it 2 trillion.
Okay.
Where in the world are they going to come up with 2 trillion on this tax plan? Part of me thinks that it is a pander to the base, saying we're going to get them. But what's going to happen is these smart people are going to have one of a few options: rotate into safety and hang out there and pay the tax on the cost basis, or just avoid selling anything and just push it out there for years and years and maybe even decades and let somebody else deal with it, and maybe another administration comes in. And, because what we've seen is during the Reagan era, when these taxes were eased, you saw more money come into the Treasury as people saw a reason to sell because they had less gains to pay. Saw a lot of money coming into the Treasury. And I just don't see it this way. Maybe I'm missing something. But
I don't think you are.
That's what I think. I got a lot of cryptocurrency, Chris. I have no plans of selling it. Absolutely not at all now. Why would I sell it if I sold it today and I could get it, or if I sold it last year, I'd get the 25% cap gains tax. Right. But if I sell it now, and this will probably go retroactive if it passes, they could retroactive it back to January 1st.
Sure could.
Then I'm paying 40, in the low 40s. What am I going to do? It's not worth it for me to sell. I'm going to hang on to it. So
Still waiting for
That's what I think.
some voice of reason to come in here and say, we're just not going to, you're going to freeze up a lot of the investment market if you do this. And as you mentioned, when we saw tax rates go down back in the trickle down economy and Ronald Reagan, and followed through with George Bush, so he wavered a little bit. My gosh, I can't, the first Bush.
Yeah.
Things slowed down because of the economy, but it comes down to people investing in our economy to keep things going, and you're kicking a leg out of the stool with 43.4%.
Yeah, I think there's some other ways, and I'm not an economist, so I'm not going to sit out here, sit on our podcast to try to figure this out. What I am is a rules-based trader, and my rules-based trades tell me that more and more there's going to be some looks into safety. There's going to be I bet you there's going to be a hell of a lot of trusts that are going to be created out of this.
Yep.
So that's going to happen. But the other thing that I'm looking at is where do I put my money in the month of May? Selling May go away? Maybe not. This cap gains tax, first of all, it has to pass, and in order for it to pass, all the Republicans are probably going to be united. So it's my educated guess that we're going to see 50 folks say no. It's possible that we could see 50 Democrats say absolutely, and then Vice President Harris does the tiebreaker. But there's that one gentleman in Virginia who is concerned about placing a tax this soon after the pandemic. And so he might spoil the whole bunch for the time being. Your thoughts?
Do you think it's just? And I'm playing. I get to play the devil's advocate, as you can too. I think there's going to be more. You're going to find more of these senators that are going to come out and say, maybe we need to.
Because they're concerned about whether they're going to be, because they're concerned about 2022.
Exactly.
So it is possible that this could be pushed aside or modified in some way, and then in 2022 it comes back around again and gets heavier. We don't know. We really don't know. But you know what? We live in very interesting times, don't we, Chris?
We certainly do. All
right. So what's on your radar right now? I got a couple of new stocks and options I added to my portfolio. So I'll tell you mine. You tell me yours. You go first.
Okay. We have not talked about clean energy in a long time. Dirty energy or old energy. What did we come down to calling it? Old school energy?
Something like that.
Dirty energy was bad. I got some
dirty energy. Yeah.
I got some pushback on that. So clean energy is coming back, Tom.
It is.
We've got the ICLN right now that's based out. It lost 67% from its February highs, right? 200-day moving average is coming into play. You look at some of the companies, Plug Power Fuel Cell, First Solar, and Enphase. Enphase just hit us with earnings last night. The stock's selling off 14%, or earlier this week, I should say. Stock's selling off 14%, a little bit of sell the news. The analysts are getting crazy. They're getting itchy about this group, and they're starting to upgrade them right now. I think that as we start to move into the second 100 days, the first 100 days, congratulations, Tom, first 100 days over this on Friday today. First 100 days passing us. I think you see that coming into focus a little more. Start looking at these clean energy companies again. I've been quiet for the last couple months, sitting on my hands.
And you know what? So goes clean energy, goes cannabis stocks.
Yes.
How about that? And I'm talking about just in the last couple of weeks, I've seen a baseline on some of these cannabis stocks that are making a quiet move up. And so you're hearing it here first before the mainstream media starts picking up on it. We saw a big jump in a lot of cannabis stocks back at the beginning of the year with the Wall Street bets crowd trying to figure out who was going to be the move up, down. Now we're starting to see that quiet baseline forming.
Look, also, you know what? We have not talked, I don't think, about these, but some of these psychedelic names. And I have to give full disclosure. I own some of these, but you've got another IPO coming out with ATAI. That's right around the corner. They just finished their filing. MindMed's just uplisted to the NASDAQ. They're not so much the mushrooms. They're more into the LSD and some of the other components. This is, I think, that Cannabis 2.0 trade, and it's starting to gain a little bit of speed. That NASDAQ listing for MindMed's really, I mean, the stock's doubled
Chris,
in last week.
Do I even ask if you do a little Q&A on any of these products?
Q&A or trial? No, I'm not part of the medical trial. No, Tom. I need to make certain.
I thought I saw you standing on a street corner over here a couple weeks ago in front of one of these buildings.
No, I'm not part of the trials. No.
All right, real quick. Here's mine. So I have Pet Meds Express.
Love it.
Really looking attractive. I think a very value play there. And so I started dipping my portfolio into the short put category because they got earnings coming up pretty soon. And I think that the puts look kind of juicy there. I'm okay owning the stock. Hostess Brands. Symbol is TWNK. So again, another one that I'm a short put candidate on, and I don't mind owning stock, with those puts that I sold. And I bought some Coinbase last week, just after the IPO, and I have added to that position by shorting puts, trying to grab it below the price it is now, and I don't mind owning more of that. I think that's a Bitcoin and cryptocurrency play. And if you see the price of Bitcoin, it has earlier in the week it started the week out in the high 40s. We've moved back to the low 50s, but the story is not Bitcoin. The story is Ethereum, as we have made once again new all-time highs. That's my three. That's my three add-ons.
I've got to give you a kicker. Twinkie popped up on one of my lists this morning just to add a little fuel to that fire. That is a short squeeze candidate. The stock is heavily shorted.
Yep. And I actually, my volatility indicator popped up on that something's going on. I looked at the calls, I looked at the stock, I looked at the puts, and these puts are kind of juicy. I'm going to go ahead and try to acquire the stock that way by selling puts.
There you go.
All right, Chris. Thanks again for another great week.
My pleasure, Tom.
Fantastic hanging out with you. And folks, we'll see you again on another Profit Strategies podcast, same time next week. Have a great weekend. Bye, everybody.
See you later.